To understand double entry, you need to note that for every transaction, there are always two accounts involved, a credit account and a debit account. To better understand what a debit account is in a given transaction, you need to remember that a debit account involves receiving or an addition, and on the other hand, a credit account involves giving or a subtraction. Here's an example of a transaction. Cash purchases made with $5. The initial step is to identify the two accounts involved, and these two accounts are cash account and purchases account. The second step is to determine which of these two accounts is a debit and which one is a credit. Keep in mind that a debit account is add and credit account is subtract. Therefore, the account which is receiving is purchases, and this becomes the debit account, whilst the giving account, which is cash, becomes the credit account. Another example is credit sales made to Sam worth $3. Sam, the trade receivable, is the debit account, whilst the credit account is sales. Here's another example. Bought a van worth $500. Before I give you the answer, pause the video and try to figure out the answer on your own. And the correct answer is credit cash account and debit the van account. I'm sure by now you understand that credits and debits are essential for the double entry system. In the double entry system, debits should be equal to credits. Debits are purchases, expenses, and assets, whilst credits are revenue, liabilities, and sales. Here's an easy way to remember debits and credits. So you can use the acronym PEARLS. P-E-A-R-L-S. The first three letters represent the debit accounts, which are purchases, expenses, and assets, and the next three letters represent the credit accounts, which are revenue, liabilities, and sales. Using PEARLS, here's another example. Rent paid for use of premises using cash. The two accounts are rent and cash. Rent is an expense and therefore it should be debited. This means that the cash account is credited. Here's the final example. Interest received. Interest is a form of revenue. Using PEARLS, it is credited. This automatically makes the account to be debited, the cash or bank account. If this tutorial helped, give this video a thumbs up and subscribe to the channel.